Inflation, cost of living going up. I want to talk to you a little bit more about that. As we can see that $100 is now only worth about $90 in our buying power. What that means to you and I, what we did last year, we're going to have to do with 10% less or figure out how to make the change. What I want to do in the next weeks is come over and talk to you what we can do to make a change where our money can go a little further, either by saving taxes and or where to spend. And the first thing I want to bring up is our cost of living. Now, the first thing we ought to do is have a safety net. Most people don't have a big savings. If you Google how many people have a savings account, it's rather low. How many people are living from paycheck to paycheck is about 70% of the people, give or take. So what I really would like to do and recommend you do, the very first thing you do is save at least 2 pay stubs or paychecks, enough money. It won't be able to do it instantly, but start working on that. Now, if you're in a job that has a high turnover, you might need 3 or 4 or 6 paychecks. In other words, if it's harder to change or your job is in a higher risk of changing, you need a little bit more of a savings account. Buy that, set that aside. Now that money that you set aside, again, let's just go in my world, it's 2 paychecks. You get paid every other week, so you need a month of income as an emergency. Emergency does not mean that you're out of food in your refrigerator and you've got to go buy Pizza Hut. Emergency means your transmission falls out, your AC breaks, you got a doctor bill that was not expected. That's an emergency. Put 2 weeks to 2 months away based on what you have. Now, if you have a job that you can change very quickly and pick up very quickly, you might only need 2 paychecks set aside. But if you don't, and your job is a little bit more difficult to land, then you might want to set a little bit more aside. Second thing you need to do is now pay off debt. And what you do by that is list everything you owe, your credit cards, your car, your mortgages, anything that has a bill to it. If it's your furniture, put it in line. Now what you want to do is put the lowest at the top and the most expensive at the bottom. Don't worry about the interest rate. Sometimes we think about paying interest rates off first, but don't. You want to start with the lowest payment. Write the minimum. Now, like on certain credit cards or certain bills, as you pay down, the payment gets smaller. That's okay. Write down what it is today. Start off with this. If your credit card A is at $220 a month, credit card B is $219 a month, and your car payment's $419, just put it in those orders, whatever it may be, on your payment. Write on the next column what you owe in the grand total. Total those 2 up. Set your budget based on that dollar amount. After you set your payment based on that, as you pay down your credit cards or pay your mortgages or pay anything down, keep paying the same amount. When you pay off the first one, that dollar amount should roll down to the next one. So now instead of you paying $219, you're paying $419 because you moved the $200 down. You are now just snowballing that effect all the way down to your debt. As you pay down on them, your payment gets smaller, but you're going to apply more to it each time because you're going to stick to your budget. So one, you're going to put away a month or 2 of income for emergencies only, so you never ever charge on a credit card again. I don't want you to charge on a credit card. Pay as you go. Number 2, start paying off your debt one by one at a time until it's totally paid off. At that point, start setting aside a little bit more money, and that's going to be your cushion or emergency or your vacation. We all know that that comes along, and that's also what you want to do. And as you do this, this is going to help you survive through this turmoil, because unfortunately, this is not going to go away in the next 6 months or a year. And you really need to set money aside so you don't have it worse. Lastly, when you're doing that, then start thinking about paying off your house. If you haven't bought a house, set aside 20% to buy down on a house. Now, there's other programs out there as first-time responders. There's bonds, first-time home buyers that we can help you put in and get that into place. But just realize you need to move yourself out of the situation, get out of debt. Now, the next thing you want to really work on is how can I cut my overhead? Talk to your insurance agent. Find out what your car coverage is. Find out what your homeowners is. If you have renter's coverage, look at that. Insurance is to protect. You spend a little bit of money for a big protection. Some of those protections you can absorb. Some of those you don't want to absorb. Like whole life insurance, you might really want to question. Term life, you don't question. That's a good product to buy. As in for your homeowners, sometimes they put you in a category of $500,000 or $1 million of liability because they scared you that that's what's going to happen. Well, 100,000, generally speaking, is a pretty good number, but you're going to have to decide what you have in assets to what you can lose. I can tell you this, 100,000 and up is all fine. It's relative on what you want to do, but those are kind of numbers that you can crunch. Next, and this is the biggest mistake a lot of people make, is they forget to homestead their house. You have to homestead your house. Homesteading the house saves on your taxes here in Florida. If you moved in the last 2 years and you had a home, sold it, and bought another home within 2 years, talk to your county about homesteading your house and portability. Both of those are going to save you a lot of money on your taxes and cut your overhead. That'll also change your payment. Lastly, if you bought PMI or MI or mortgage insurance or personal mortgage insurance, personal lines, any of that stuff came on your mortgage, check that out. You can shave that off based on the way the prices have gone up. And as long as you're current on your payments and you don't have an FHA loan, you can get rid of that. Those things will cost you a pretty penny. I know of houses that are a minimum of like $90 on up. Some are paying over $200 a month for mortgage insurance that gives you no benefit. All that insurance is giving the bank a surety that if you foreclose or don't make your payments, they're going to have coverage. That has no bearing on you, and you're paying a dear premium for that, and you want to get rid of that. Those are just a few tips to cut your overhead. Put emergency aside, start paying off your debt, and get rid of your PMI, and then please add homestead to your home. And that'll help you. And if you bought and sold in the last few years, ask about the portability, because that will save you even more.